Hi guys, so here Anwari here, co-founder of Sublime Trading, here with your daily update on the UK and US indices for Wednesday, the 1st of April. Now, I've had a number of messages come through asking if I could explain what my chart setup looks like. So let's start with that today, starting with this screen setup you can see here in front of you. So what I have is the monthly time frame in the top left corner, and the weekly time frame in the top right corner, and I have the daily time frame here at the bottom. Now here at Sublime Trading, we are long-term trend followers, so we're looking for the large moves in the market. We don't use intraday time frame, so we don't go down to a 1 hour time frame or a 5 minute time frame. We look for the big moves in the market, and so to be able to look for the big moves in the market, you need to have the right time frames, and so that's why we use the monthly, the weekly, and the daily time frame. Now each time frame has its own purpose, but ultimately what we're looking for is alignment. We want all three time frames to be moving in the same direction. So there's certain tools that we have on each time frame that allows us to look for that. So let's start with the monthly time frame. Now what you can see on the monthly time frame is, first of all, this green line going across the screen and this red line going across the screen. That is the high and the low of the previous calendar year. So as we're currently in 2020, this is the high of 2020 and this is the low of 2020. Now ultimately, when we're looking to place an investment, what we're looking for is a bias. We want to be able to establish environments where we have more chance of making profit than a loss. There are no guarantees in trading. Anyone who says they knew something was going to happen, or they could predict that was going to happen, that it's just nonsense. Ultimately, what we're looking for are high probability environments, and so we're looking to build a bias to price action. So one of the first factors that we look for is either price to be trading above the high of last year for it to have a bullish bias, or below the low of last year to have a bearish bias. Now we're looking at the indices in these videos, so expect the indices to have a bearish bias. So you can see here currently this is the FTSE 100, that price is trading below the low of last year. Now what else you'll notice are these black dotted lines going across the chart. These are ultimately key levels of support and resistance that we look at. So if price came to a level of support like it did here and then moved to the upside, this will then be marked as a key level of support, and then if we had a move from up to down, then it would be marked as a key level of resistance. And these tools that you can see on the chart, we've developed these tools so that the software will automatically detect these levels and plot them on the chart for us, so we don't need to be drawing these on manually, which saves us a lot of time. Now if we go to the weekly time frame, there's two very simple tools on here, but just open up the weekly time frame. We have the black line, which is the 200 moving average, and the orange line, which is the 50 simple moving average. So ultimately what we're looking for is price to be below both moving averages for it to have a bearish bias, or above both moving averages for it to have a bullish bias. Now if we come down to the daily time frame, what we have on the daily time frame are three moving averages. So the black again is the 200 moving average, the orange is the 50 simple moving average, and the blue line is the 20 simple moving average. So again, very similar to the weekly time frame. For a bullish bias, we want price to be above all three moving averages, and for a bearish bias, we want price to be below all three moving averages. So now what we look at when doing my analysis, ultimately on the monthly time frame, the weekly time frame, and the daily time frame, as mentioned already, I want price to be moving in the same direction, and for price to have either a very confirmed bullish bias for me to go long, or for price to have a confirmed bearish bias for me to go short. If there is no alignment between the time frames, then generally I stand aside. So looking at the FTSE 100, let's start with the FTSE 100, start with the monthly time frame. We can see, as already mentioned, price is trading below the low of last year, so price has a bearish bias, but we can see where price is currently struggling, which is this support level going back to February 2016. The month of March attempted to break through. You can see there's a wick to the low of this bar, and then the bulls came in and pushed price back up and closed above this area of support. But so far now in April, we've seen weakness to the downside and prices currently trading below this level. We want to see closing prices to confirm further weakness. So we want to see price close below this level to suggest further weakness. If price closes above this level, then this level is obviously holding strong and we could see further strength back to the upside, and ultimately we could see the all-time high being cleared. Now let's just have a look at, if I take this tool here, the measuring tool on the toolbar on the left hand side, if I just click at the top there and then click down here at the bottom, we can see that at one point in March, price was over 30. Price had dropped over 36%. Currently, looking at where price is, we can see price has weakened just around 30%, just under 30% since the start of the year. So that's significant weakness in price. Okay, now if I move across to the weekly time frame, we can see that price is below the 200 moving average and the 50 simple moving average. So there's weakness in price. And then on the daily time frame, if I just open that up, price is below all three moving averages. Now, something to be aware of is that the 20 simple moving average acts as a key level of support and resistance when price is in a trend. So we can see we've had weakness to the downside, then we've had a significant pullback to the 20 simple moving average, but we can see that this is holding strong as a level of resistance. And so far today there has been further weakness. So we're looking at, let's take the measurement tool again. So far today we are seeing weakness of around just under 5% weakness so far today, but significantly that weakness so far has taken price below the low of February 2016. So once again, guys, it's the closing price that we are concerned with. So we want to see price close below this level for price to then suggest possible weakness back towards the low of March 16th. If price closes above this level of support, then price obviously not ready to break below this level, and we could see further strength to the upside. So we need to see how price closes the end of the day before we can really make any informed decision. But ultimately, until price actually breaks below this area of support, this will just be an area of consolidation. It's a break below this area of support that will suggest further weakness. So that's the FTSE 100, guys. So let's move across into the US indices, starting with the Dow Jones and on the monthly time frame. So if I just open up the monthly time frame again, if we look at February and March, we've seen significant weakness to the downside, but look at where price has reacted to the support levels marked on the charts. First of all, price is trading below the low of last year, but it's been pegged back by this support level, which is the support level of December 2018. And then earlier in March, price came to the high of May 15th, where it found support. And then price was the bulls came in and pushed price back up. So quite a significant move back to the upside. If I just take my measuring tool since the month of February earlier this year, we saw a move to the downside of almost 40%, but the bulls came in and pushed price back up. So we can see currently price has dropped just over 25%, so almost 26% since the high of February. So it'll be interesting to see whether we do get further weakness as the month of April progresses, or whether these support levels will hold strong and we'll see price move back in to the upside. If price remains inside the levels of last year, then that will just be an area of consolidation. Now, if you move across to the weekly time frame, we can see price is below the 200 moving average and the 50 simple moving average. There was a pullback in price last week, so it'll be interesting to see whether we do get strength back above the 200 moving average, or whether the 200 moving average holds strong as resistance and then we see weakness back to the downside. If we come down to the daily time frame, very similar structure to the FTSE in that we've seen weakness to the downside. Price is trading below the 200, the 50 and the 20 simple moving average. We've had a pullback back to the 20 simple moving average, and you can see again here this area of support. If I just compress the chart, we can see that this area of support, let me just compress the chart. This area of support goes back to, get a better idea here, you can see this area of support goes back to May 2015. So these key levels of support holding strong. We've had a move back to the upside to the 20 simple moving average. Now we need to wait and see whether the 20 simple moving average does hold strong as resistance and we get a move back to the downside, and ultimately a break and a close below the low of May 23rd to suggest further weakness, or whether we do see strength back to the 200 simple moving average. If the all-time high is cleared, then we could potentially see new highs and then further strength in the market. Okay, the next chart is the SP 500, starting with the monthly. We again see weakness to the downside, but look at where price is in relation to the low of last year. Prices in March, price actually closed above the low of last year. So this area is acting as support, as did this area of support, which again is the high of May 2015 and the low of December 2018. These support levels held strong. The bulls came in, pushed price back up. If we take that measurement tool from the high of February, we can see at one point we had weakness of over 35%, almost 36%. Currently, we've seen weakness of around 24% since the high of February. If we move across to the weekly time frame, price is below the 200 moving average and the 50 simple moving average. We can say weakness through the 200 moving average. We've had a pullback, which is now acting as resistance. Again, the 200 moving averages act as key levels of support and resistance. Now we need to see whether this holds strong as resistance and a move to the downside, or whether the bulls start coming in and pushing price back up to that all-time high. If we come down to the daily time frame, price is below all three moving averages, so we can see prices below the 200, the 50 and the 20 simple moving averages. Again, we've had a pullback to the 20 simple moving average, so we need to see whether this area holds strong as resistance or we get a move back to the downside. Again, if I just compress the chart, we can see that it's a low of December 2018 that price found an area of support around. In fact, price just broke below it and then the bulls came in, quickly pushed price back up. You can see price is now back above this, but faced with resistance at the 20 simple moving average. The next chart is the Nasdaq, starting with the monthly time frame. If I just open that up again, we can see similar to the SP 500, prices above the low of last year, which is acting as support. If we take the measurement tool from the high of February, we can see price had weakened around 31% since the high of February, but then the bulls came in, pushed price back up, and we can see price is now just under 20% in terms of weakness since the high of February. If we move across to the weekly time frame, now this is a little bit different. The Nasdaq didn't actually break through the 200 simple moving average. It came to it, found support, and price has bounced off it. So it'll be interesting to see whether the 50 simple moving average now acts as resistance and we get weakness to the downside, or whether we get a breakout, further strength to the upside, and then a breakout above the all-time high to suggest further strength. If I open up the daily time frame, we can see there was weakness, good weakness through all three moving averages. Price is below the 20 and the 50 simple moving average, but currently price is just about trading above the 20 simple moving average. So again, we need to let price dictate whether we see further weakness back towards this area of support. Let me just be more accurate with that. This area of support, which is the low of June 2019, or whether we start seeing further strength to the upside. Now, if price on the Nasdaq breaks and closes above the 200 moving average and then starts gaining momentum to the upside, then we can expect the SP 500 and the Dow Jones to follow, as this is trading much closer to the 200 simple moving average. So if we do get a break above this level, then we could potentially expect further strength. Now let's move to the SP 500. The SP 500 gives us an indication of pre-market price action. So let's start with the monthly time frame. We can see clearly weakness to the downside, but the month of March failed to break through this area of support, and also the low of 2019. So the bulls came in, pushed price back up. But if we look at April, we're starting to see weakness already to the downside. So potentially we could start seeing weakness, and we could see these support levels start being cleared and then further weakness to the downside. It really is for price to dictate whether these support levels are cleared or whether these areas hold strong as support, and then we start seeing a move back to the upside. On the weekly time frame, price is below the 200 moving average and the 50 moving average. We can see the pullback to this area of resistance, which is the 200 moving average, and we can see the bears now are starting to push price back down. If you look at the candlestick for this week, it was bullish, but the bears have started coming in and pushing price back down. There's a bit of a wick to it, but again, very much early days. We need to see how price ends the day to really get an idea of where we are, and even the end of the week to really get an idea of whether we are going to see further strength or further weakness. And if I open up the daily time frame, price is below the 200, the 50, and the price is below the 200, the 50, and the 20 simple moving averages. Again, if you look at the pullback, good weakness in price, and then we've had a pullback to the 20 simple moving average. We can see how this is acting as resistance. We've seen weakness on Tuesday, and so far now on Wednesday we are seeing weakness. So pre-market action suggests that we are seeing an area of resistance, but again, it's the end of the day that would really confirm what price is suggesting on how it would like to see out the rest of this week. Remember, the institutional money comes in towards the end of the day, particularly in the last sort of hour of the trading day. That's when the institutional money comes in. So it'll be interesting to see whether we do start seeing further weakness or whether we see a reversal in price and then potentially further strength. Ultimately, what we want to see across the board are these low points taken out. Here it's the low of the 23rd of March. If this low point is taken out, then that will be a strong confirmation that we are likely to see further weakness to the downside. The way the indices are currently set up, there isn't a clear bias across the indices. We aren't fully bullish, we aren't fully bearish. In fact, currently we're in a bit of a no man's land, and we need price to dictate a clear trend direction before we can then start looking to make any decisions on any instruments or any assets that we want to start getting involved in. If we start seeing further weakness and these support levels broken, then we'll start looking to short the market. If the market starts gaining strength and we start seeing price above these moving averages, then we'll look to start getting back into the strongest performing stocks. That's the chart setup that we have here, guys. I'll be doing more of this going forward, so any comments or questions that you have, do not hesitate to leave them below. Please also like, comment and share this video with anyone else who you feel will benefit from this. So see you on tomorrow's recording, guys.